Good morning, traders. Welcome to the webinar of Admiral Markets. My name is Chris, and today we're going to take a look at strategy, looking at the technical analysis and the Forex commodities and stock indices. So if you're following Twitter, by the way, please take a look at these Twitter handles to keep up to date. Also, please be aware of these two disclaimers. First, explaining the fact that this webinar is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. So today we're going to be taking a look at strategy. Typically when I do analysis, I look at trend and momentum, patterns, support and resistance, and that basically gives me the analysis to understand the market structure and see if I like the particular currency pair or instrument. If I do, then I'm looking at decision zones. I'm establishing where the decision zones are, so I want to wait for price to get to those levels. I don't want to trade it in the middle of nowhere, let's say. I'd rather wait for price to reach a clear area of support or resistance, looking for a trigger at that area, and then I see if there's a good reward to risk available. So that's basically the process that I go through when looking at analysis and setting up the plan to trade that day or this day. With that said, let me now head over to the calendar quickly. Of course, always be aware of the events that are coming up with regard to the news. Those could influence and impact price. So you want to take a look at the calendar. You can do that through Admiral Markets, where you can find the calendar, but also a lot of other things like our blog, analysis, education, among other things, plus details, of course, how to trade, obviously, which is more on the left here, and the platforms. Regarding the calendar, though, take a look and get some pound news typically going on in the morning about 10:30 a.m. UK time. No, sorry, 9:30 a.m. UK time, 10:30 a.m. Central European time. Got a Bank of Canada interest rate decision, and later this week, tomorrow to be precise, we have the ECB. Now the ECB is expected to increase basically expand, I should say, the quantitative easing program into end of next year. It's now at the moment March, with Italy saying no to referendum. The expectations are that they will expand that. Tomorrow we'll find out with that interest rate decision, I think, as well, but also the statement primarily that will be, and a press conference probably that will be available tomorrow. So that's something to be aware of. There could be a bit of a interesting price action connected to that volatility, connected to that event. All right. So euro dollar yesterday did not make the upside that I was expecting in a way, because I was thinking that this could still be a wave 4, but 3 dojis throughout the London Open was not a good sign. No clear, strong candle close near the high. So that was something that I didn't like, this combination of candles. And indeed, the next one we saw a retracement to the downside instead. Now that retracement might not be over yet. I still think that this downside is a retracement. Excuse me. And I think that the price could bounce at one of these fibs. If I put a fib on this swing high, swing low, strong momentum here, I think there could be a bounce. Let me see if this fib is properly placed. Okay. Yes, it is. So it could bounce at the 38.2 fib or the 50, 106.85, 106.50, I think could be support levels. All right. So price might make that small dip still to those levels, but I would expect a bounce at any of these fibs, but probably the 38 or 50 or 61. All right, so this zone especially important as support, I think. So let's see if that happens, but that's what I'm keeping an eye on. Yesterday, intraday trading. Oh, let's go back to yesterday. Let's see. All right. So basically here, this was still looking like a bull flag in my opinion. Momentum up, bull flag. You see that right here, this piece. And eventually, price broke through these bottoms here. All right. So I think that was a key kind of development right there. This was otherwise looking much like a bull flag at first, but once price broke through this bottom right here, it actually was more of a descending wedge. Then you got the momentum to the downside. So at that point, that's where the bullishness is out of the question for intraday purposes, and there was a good chance of a retracement lower. All right, so you got a bear flag in a way, momentum bear flag, and you got one more push lower. So there was not a lot of movement under euro dollar, but that's basically what happened. So just wanted to run you through that so you have, you can see how chart patterns can help as well, besides candlestick patterns on the hourly chart, to see that yesterday was a bearish, could have been a bearish intraday potential. From a long-term, or not a long-term, but let's say from an hourly perspective, I still think that this is bullish, and I still think that the 4-hour chart will make an ABC zigzag to higher levels before turning back down. So what I'm expecting at this point is something like this. All right, so now regarding the indicators on these time frames, 4-hour is up slightly, blue as you can see. All right, and this is making a retracement, the Fisher and MACD. So as soon as this retracement is over, there could be a 4-hour, not a 4-hour action because the daily is still down, but maybe an hourly setup. Let's take a look. This could be get a dip right here and a turn back up. So when that happens, this is still up barely. So 1 hour, 4-hour are up at the bottom indicator. That's the sigma momentum indicator, what I use for trending purposes. And the Fisher and the MACD I use for end of retracements. So 1 hour, 4 hour is still up. So if this makes a double dip here, it could be a 1 hour setup. But the only thing is that this is close to the 0 point. So this could turn. So from an indicator perspective, that's what I want to focus on today in strategy. It could be close to a setup, but it might not be. All right, depends. If it really traces deep, this might be invalidated as this goes down like here. So we'll have to see. But from a wave perspective, I do think that this still seems likely. Now, how much price action can it make until the ECB event tomorrow, somewhere in the afternoon? And the answer is quite a lot. We still have tons of hourly candles ahead of us. So there's really still a lot of things that could happen. It could make, for instance, this down and up like this, then tomorrow morning go sideways, perhaps, as the market waits for ECB. That could happen. So there's still a lot of things that could occur. My primary focus is the bounce, the bullish bounce here. I would be trading the bullish bounce either through this indicator combination or a bullish engulfing twin, a bullish candlestick pattern on the hourly, or if on a 50-minute chart, 1 second, price heads towards these pivots, for instance, on a 50-minute chart, then bounces, shows weakness by 5 to 6 candles, not breaking this bottom with the red arrow. There should be divergence between these bottoms. That could be a sign of weakness here, and there could be a bounce like that. That's another way using time factor on a 50-minute chart, for instance. So we'll have to see. Regarding the time factor, but that's how I like to trade the bounces as well. So those are just a couple of ideas how I would tackle bullish continuations to the upside, folks. So that's my 2 cents. Now, I could be totally wrong. What if I'm wrong? What is the alternative? What is the invalidation kind of, when do I think, okay, I'm going to adjust my analysis to a different view? And that basically, if I see huge candles here on the hourly chart, just blasting through the 50 fib like that, if I see one big candle like that, I would already be basically thinking that intraday will be still down, at least to the 50 fib, maybe even to the 61.8. But if it really breaks below the 61.8 and the momentum candles still keep pushing, then maybe we won't get that big bullish bounce. Maybe this was the end of a correction. So if there are big candles here pushing below the 61.8, yes, then I am not expecting necessarily ABC zigzag anymore. So that's basically, you always want to keep in mind when the analysis might be different. When might it change? That's just to avoid, us traders kind of clinging on to analysis that just isn't up to date anymore, that doesn't make any sense and is based more on emotions than facts, right? At this moment, I can honestly just tell you that I think that's the best analysis possible, right? At this moment. But the market doesn't always do what I think or how I analyze it. So to avoid my bias, the bias that everyone has when analyzing, getting in the way of myself, right? I want to update my views with what's going on the ground, what's really happening with price. And I don't want to get stuck in a situation where I hope that my analysis proves to be right. That does not work out well, and we traders then start to ignore reality and start to kind of like find confirmation clues in the smallest details just to hope that we are on the right side. So that's something that I want to avoid. That's why I keep my 2 feet on the ground by continuously analyzing and saying, is this still the best or is there something else going on? Always trying to think about the counter argument. Not in the sense that I want to, not that I'm always telling giving myself counter arguments to talk myself out of a trade, because eventually that's not good too. You got to find that balance. You want to make the analysis, make the trading plan, trade the plan with confidence, right? Not with fear. But also we want to trade the plan with some reality and keeping in mind that the market changes, the structure changes. And we don't want to be oblivious. We don't want to be ignoring that new reality either. So that's the balance that I think is the best for traders. If they can find this, balance, basically. All right. So when do I think that this analysis is not valid anymore? It's not likely going to happen. This ABC zigzag up here, A, B, C. And one of those things that I think could make that invalid or less likely is strong momentum and a push below the 61.8. What makes it certainly invalid, not less likely, but 100% invalid if it breaks below this bottom. That's where the ABC zigzag is technically fully invalid. Alrighty. So, if you have any questions, by all means, please let me know through the chat box. Good morning, Kertu and Bernard and everyone else. I hope that everyone had some good trading yesterday and this week. And maybe the reversal on the pound was one you took. I never a big fan of reversals, as you know, but we did talk about yesterday the rising wedge. Now, I personally think rising wedges are extremely difficult to trade. Don't get me wrong. But we did talk about this rising wedge and that I didn't like the upside unless it broke above resistance. It tried to break, right, but it failed. I'm not sure where we looked at it yesterday was, let's take a look. Yesterday was here, right? So we still had the small bullish candle, but I was looking for break. The hour after our webinar, we had engulfing twins with the pin bar. So that was already a first sign that a break to the upside wouldn't happen. Then after that, we had 1, 2, 3, 4 candles not breaking the high. The fifth candle was bearish and an engulfing twin. So from my perspective, trading the rising wedge itself is difficult. I think that this one is early, but, you know, in retrospect, of course, we can see it worked out. But that one live, not as easy, I think. You know, but yeah, I mean, now we can see engulfing twin, pin bar, yes, okay. But I think the stronger one still, because I'm always cautious with reversal trades and rising and falling wedges. But I think the key here was this one. Strong candle. What I liked about it was the strong candle. Engulfing twin, strong close, near the low. The fifth candle as well, which means often the end of a bullish, of a swing. And indeed, we got a bit of retracement and follow through to the downside, as you can see. So that was a good reversal on the pound after this rising wedge. You know, this could have been the trigger. This candle could have been the trigger, for instance, on a 50-minute chart or 5 from an intraday perspective. Here you go. You see, when you're using these oscillators, you can see that this is where it turned. So that's where the pullback finished, and that's where a trade could be entered. There are various ways of tackling this, to be honest. I mean, just looking at the candlestick pattern, the entry could be at close. The entry could be at a retracement of that candle, like this. Put a fib on that. $38.50 fib zone there, as you can see. That's one way. Other way could have been to look at these indicators, right? So, okay, let's look at these indicators. Now, the hourly is up still, all right? So this is definitely actually not an indicator trending trade. It's a reversal trade, so I'm not sure if we'll get the indicators to align. The 30-minute chart was still slightly up. So no, not really. The 15 was down. And the 5 was down, obviously. And there was this retracement here. So not really a trending trade, obviously, but the Fisher and the ACS MACD could have been used as triggers as this retracement goes up to blue. Remember, what we're looking for when for a downside trade is a pullback to the opposite direction. So this to turn blue, opposite of this. This was, maybe I'm getting confused here. Wait. No, it's true. Hang on, because indeed it's at the end of London, but somehow I thought it was earlier. 17 o'clock. No, it was towards the end of London. You're right. Somehow I thought it was earlier. Because it was only a couple of bars, but yeah, a couple of bars, of course, is already basically the entire trading day. So it goes fast indeed, yeah. 6 hours that's it, yeah. Didn't realize that. No, you're right. So it was towards the end of London. Well, it still worked out, but I can see your point, though. Anyone who didn't trade that, because from an intraday perspective, I fully understand that. We got a push through here in the New York session, in a way, a bit of a fall. The London session, the primary London session here was more or less just sideways, wasn't it? This was from here, 9 o'clock till 4:30, right about here. So didn't go anywhere except this small fall. Zitan is saying that recently a lot of trades happened during that time. is his observation. So something to be aware of. So yeah, that's just I'm just wanted to add one more thing. That's basically when I use this momentum basically as a long term, and I use the transfer and ESCS MACD as short term pullbacks. What I'm looking for is the opposite, right? I want this to go into blue territory and then turn, opposite of the red territory here. All right. How about now, though? Now, my observation is that there is some divergence between these bottoms. There's 5 waves down. From a wave perspective, for instance, I think there could be a bit of a bounce and an ABC rally here, but shouldn't break above this top. If this is going to be a bigger, price has also reached the long-term moving average. So I personally, there could be a few pips lower still. We have to see how much further it can push. Excuse me. Let's see. I mean, I personally think it's close to a bouncing spot at this moment again. So yeah, maybe that's too contrarian, but that's just my view at this moment. I was cautious here and could definitely see a potential for a retracement because of the rising wedge. Although I was also open to the upside if it broke above resistance. Here, it's again the opposite. I'm cautious of downside because of the 5-wave pattern. But sometimes I do anticipate that a bit early with waves. I already see the end of it. Sometimes a bit too soon, and it still pushes down 40, 50 pips before you get the ABC zigzag. So that does sometimes happen with me. However, I just don't think it's a good point to personally to short. I think that if there was a short, then on a 50-minute chart, for instance, then here after this correction, this bear flag was over, that made more sense. Even though it was the Asian session, so it's not a great timing perspective. But now, I just don't think it's a good point. But we'll have to see how London opens as well. Let's see. This is the last hour's candle. If this hour's candle is very strong, very big, and I'm talking about a candle that has to be at least bigger than this candle, which is 38 pips, so it'd have to go at least 50 pips. It'd have to go all the way down to below 126, I think. If this hour goes below 126 and closes near the low, there might be just a simple continuation to further to 125.50, 125. Then it might make sense to look on a 5-minute chart or 15. We should see this momentum down, look for an ABC kind of correction, and there probably is going to be a follow-through on that for intraday perspective. But we got a pound news as well, so no sense to rush for the next 1.5 hours. We'll see how that next 1.5 hours develops on this pound and the pound USD, and see. I will look at price action to see if the ABC is going to happen, or is the momentum so strong that it'll be followed through and more push to the downside. On the daily chart, by the way, this is still red momentum, but the fish in the MACD have turned. So this is the moment where a swing trade on this pin bar here, this bearish bar, could be a swing trade. Could have ended a 3-wave correction. By the way, we talked about this yesterday too. And this could start a new downtrend like this. So let's see if that happens, but I think it could make sense. That's the pound dollar daily chart. Eagleist is saying on the pound dollar, I made entry based on the 50-minute candle that retraced to the 89 EMA after the momentum break. Perfect. Great. Whatever pullback method works for you. The Eagleist uses 89 EMA. I think then it also sometimes does. I personally don't, but the difference is small. 144, 89. It's really all. It's the same way of using it anyhow, probably. So, great job. Dollar yen. Sorry, dollar yen was bullish on this, or still am bullish on this dollar yen, right? For week daily is up. 4 hours is just barely still up, right? But it's slowing down, and hourly was kind of mismatchy, going back and forth. Now, what I was looking for was a turn on the oscillators here, which happened here. We were talking about this one yesterday as well, somewhere around here. All right, so I was looking for a break. That break never really happened, just went sideways, still going sideways, in fact. So yeah, this is a bit of a choppy one. We'll have to see how this reacts. If this is more and more starting to look, if it doesn't break up, then this is starting to look more like a bear flag, and we might see this. So definitely keeping an eye on these bottoms here. If that breaks, there could be a bigger reversal like this, or not reversal, but retracement like that. In that case, I would put a fib on this swing high, swing low, and I could see price fall to the minus 272, minus 61.8 targets. 112.70, 112.50, 112.13. And it could do that because this is really starting to slow down a lot. It's looking pretty corrective. So anyone who took longs, in the past on this dip, on this pullback, maybe even from here somewhere still, or somewhere as these retracements were made, as anticipation of a breakout, I think you want to move it to break even, in my view, and take the risk off the table. That's just my view. I think that moving it to below these bottoms here is the best. I don't think it makes sense to hang in a trade like this. If it goes, great. If it doesn't, I don't think it justifies keeping risk on the table with this structure. Alrighty, folks, so euro yen, we talked about that. It really didn't go anywhere either. I was looking for upside because the 1 hour and the 4 hour were trending. One of those was right here on this candle. All right, that was just before our webinar. Got a bit of upside, but then quickly got rejected. And on a 5-minute chart, you can see that this momentum was not good for the euro yen. So let's zoom out just a tad here. All right, so here we had the start of the 1 hour turn, let's say, but ultimately this looks like a bull flag, but then broke. That's something. It's always good to keep an eye on. This pattern already occurred earlier on the other pair yesterday. It starts to look like a bull flag, but it fails. So when you see formations like that, that's why I was also saying about the rising wedge, for instance. It's good to keep an eye on both support and resistance, because the pattern could fail, and the pattern might turn out just to be a start of a reversal. So the first bottom is never that important, because obviously with a flag, this bottom gets broken. But the second or the third, once those break, sometimes that's the moment where the flag really fails and you get the opposite side. So regarding the indicators, any way of seeing that? Well, the 5 minute really goes into uh, deep territory again with this candle. So that's really the candle that kind of nails everything for sure. With that candle, um, there's a good chance that that's the momentum candle to the downside. And indeed, look at that. Follow through a bit, sideways, and one more push lower. Alrighty. Now at this moment, the euro yen still looks overall though like a bull flag, right? Because you got here like this, but same thing. This bottom is going to be important. Second bottom. So we'll have to see how price responds here. Is it going to break above resistance or break below support? That will say something about the direction it's going to go to. So at the moment, these oscillators are still up. This too, but it doesn't have to mean that it will go up, right? But I would say it's still bullish considering the bull flag that's being made. But the level that might change things is this. So that's where I want to be. That's where my analysis says, okay, hey, watch out. It's not that bullish formation that I necessarily expect. Now, I can still put a fib on here to here, so I know where bouncing spots could be. 121.50, 121, 120.50, 120, 119.75. Those could be bouncing spots, support levels, and the downside could stop at those levels. Now, trading this to the upside, regarding the indicators, let's take a look. 1 hour is still up. 4 hours is still up. Now, the 4 hour on the MACD is making a retracement. So that, if this turns from thick to thin, that could be one way of trading it on the 4 hour chart. So there's a slight pullback on the 4 hour. On the 15, there's also a slight pullback here going on. I would rather wait for the Fisher to go back below zero, like it did here. And you can see that this turn right here was a potential entry and moved up about 30 pips from there. But from a chart perspective, it's the same like the dollar yen, to be honest. It does not look that great. This does look quite corrective. This was a strong fall. I think I would like to see more proof first. I am probably going to want to see price break above the M3. Break above the M3. Then look for a dip and then buy. Because the thing is that I could be looking for a pullback here on the oscillators, right? Because the trend is up. But this little pattern here is a bit awkward. What could happen is that what looks like a pullback because the trend is up could just be a bigger correction. I'm not sure if this is the best pullback spot. So I'd rather be a bit more patient and wait a bit longer. Craig, by the way, short at 114.41. 114.41. So that's, let's see, that seems to be probably somewhere in here, I guess, or here, way at the top. So great job. Great reversal trade. Maybe based, just speculating, maybe the spin bar here, perhaps. Let's see what Craig says if it's the spin bar. but that seems, so as far as I can see, probably most likely at this moment. Let's see. Great job. And if I were you, Craig, I would probably, if I were you, maybe even move the break even. I would myself, because if it pushes above this trend line and the 114.41, then it could be breaking this resistance to the upside. If it breaks above this trend line, then I think there's a good chance that it will just keep pushing and go above this top to post a higher high. So I think the entry is great. I think the entry is working out very well, actually, because there's a decent chance that this is a bear flag, and then boom, this falls. But I also my personal opinion is that if it does push through this level, that there is a higher chance again that there is a breakout to the upside. Yeah, you can watch it too instead of moving it. Indeed. Look how price action. Look how this candle basically forms, and how how its structure looks like. How is there a wick? Is there a strong close, etc. Yeah, very close to the 61.8 fib indeed. 115 round level is important too. Well, I certainly can see why traders are looking for a reversal here. I mean, there are some good reasons to look for it. Definitely I can see that. And with the 114.41, that's a great price. So I think there should be a good chance of getting profit or break even. But as I said yesterday, I might myself be more cautious with the yen side of things. They tend to be, once a trend's pretty strong. And but let's see. We'll find out soon enough. This particular formation is taking quite long, though. Alrighty, folks. Ozzy, talked about that. The channel to the downside yesterday, but that it was at a bouncing spot. It did bounce, but the news event made it spike down. So ultimately failed to break this top. Failure here. Strong momentum. This was a news event. Now it seems like it's more or less going sideways at this moment. Aussie seems to be quite a mixed bag at the moment. The hourly, if you look at the oscillators, the hourly is down. 15 is down. Could be maybe still worth it. If this makes one more push up like this and then turns, it could still be worth a short as it makes something like this, for instance. So Aussie 50-minute chart could be worth keeping an eye on. Market pretty sleepy at this moment. Dollar CAD didn't get the follow through to the downside. It went sideways for 5 hours, and then we got the opposite. Now going sideways. Yeah, kind of sleepy. I mean, it's trying to break above this resistance, but it's doing that very passively. Choppy here. So I'm not sure what my favorite is, to be honest, at this moment. The euro pound. Yeah, the euro pound. I don't like the euro pound typically, but we did talk about the zigzag yesterday, and it bounced and it's heading toward target. So anyone who might have grabbed this one here on the turn, this turn, or this turn is up in pips as this is continuing with its swing to the upside. So that was yesterday. But for today, I'm really not sure which one I prefer at this moment. So yeah, we'll have to see when these consolidations break. I'm not sure at this moment. Which one do you prefer? Do you have a preference at this point? Maybe the pound weakness seems to be visible against New Zealand and odd as well. Kind of turning around. There is divergence between these tops. Price is going sideways. So I'm not really a big fan at this moment of these particular pairs. Maybe some crosses have something more to offer. On New Zealand, we talked about that yesterday, sorry, and sixth candle was bullish right here. So good chance of a bounce, and it did bounce for 50 pips. Didn't get up to this trend line though. It didn't manage to break through these tops. So that was a bit of a bounce there, then a rejection again down because of the news event on the Aussie, and now it's again at the bottom. And maybe again a bouncing spot, although a break could certainly happen now too. So let's count them. Sixth candle is bearish. I would definitely wait for this candle still. If this is bullish, there is a good chance of a bounce, a decent chance of a bounce there. That might be maybe the more interesting one on the odd New Zealand. All right, folks. I think all in all, odd New Zealand probably from a lower time frame could be interesting. I think your dollar upside could be interesting today, either if it retraces deeper or if it breaks above resistance, if it shows momentum, pulls back like this. So your dollar on New Zealand, I think pound USD, either way, just going to keep an eye on the news event at this moment. Dollar yen, if it breaks one of these two lines, keeping an eye on that. Euro yen, prefer the upside probably a bit on the euro yen there. Could be interesting. USD, maybe if it finishes this bear flag to the downside, maybe. And that's about it. Otherwise, I don't see anything really interesting. Those are probably the most interesting ones at the moment from my perspective. But generally speaking, regarding these indicators once more, what I'm always looking for is an opposite. I'm looking for a match at first between two time frames with regarding the trend, let's say 1 and 4 hour chart. And on the lower one, I'm looking for basically these pullback indicators to be opposite of the trend so that, and then turn so I know the pullback is over. All right, so if that's not clear, just let me know. But if this is a downtrend, this is red, that's supposed to be red then. In that case, I'm looking for this to pull back like this and then finish. That's one way of for me to use entries, triggers, besides candlestick patterns, besides the time patterns I talked about in previous webinars. There's one other way for me to tackle an entry, to look at a trigger and say, okay, this is the moment that the pullback is probably over. I like all three. Candlestick patterns are great. Time factor patterns are great. This is very useful too. And sometimes they match. Sometimes there's confluence. Sometimes there's 2 out of 3 that happen. So it kind of gives me a wider range of methods to tackle an entry and trigger, which I appreciate. And I don't have necessarily a preference for any of these three. I just like all three of them. So after I do the analysis, looking at trend, looking at patterns, looking at support or resistance, if I like the currency, then I look at the decision zones, and then I use one of these three methods for the trigger. Basically, that's my favorite way of planning the trade. So with that said, one more last message quickly. Nana takes a look at Heikenashi with Ichimoku tonight. Tomorrow we take a look at invalidation and confirmation levels. Next week we're back as well with looking at commodities and the euro at the end of this month, and the beginning of next year we take a look at what we expect to forecast for 2017. Wish you all great trading, and talk to you soon. Cheers.